Hello, everyone, and welcome to another live stream. So, hope everyone is doing well. If anyone has any questions, of course, the chat is open here on my right side of the screen. So, I'm looking at the comments. So yeah, let's get it started. So, for the beginning, I think it's best if we take a look at the charts. It kind of helps with viewer retention, because the moment I click away from the charts, the viewers go down as well. So anyway, let's start with the charts. That is the most interesting. And we had some major news last day, or like yesterday, at 10 p.m. my time. Okay, so we had some major news. It was the tariffs. The tariffs got announced. They are really high. So some people were thinking that they were going to be not that high, that they were going to be a bit less, but they turned out to be pretty high, around 20-30% for some countries. So again, we can view the reaction on the markets, which has been pretty problematic. So here is the S&P 500 selling off, NASDAQ selling off, Bitcoin. Bitcoin is kind of holding a little bit this level. Ethereum selling off. DXY, the dollar index, just selling off. So dollar index losing a lot of strength. US oil is selling off as well. Hello, Saran. How is Darwinex going? Got seed allocation? Unfortunately, no. I don't have any allocation currently. It's going okay. So February or March and April have been okay in terms of percentage. I'm trading this new strategy on top of my old strategy. So I did make some gains on that, and currently trying to climb out of drawdown. Okay, I'm currently in some drawdown. Actually, on the Darwinex account, I think I'm positive at around plus 4 or 5%. But my drawdown is around 12 or 13 on the Darwinex account. So the return to drawdown ratio is pretty bad, and I'm not eligible for a seed allocation. Okay, so I need to make some more gains. Are you doing Darwinex? How's it going? You can put it in the chat if you want. So anyway, everything is red today. It is a definite risk-off environment. US oil is crashing, so oil prices are going down. And as Trader Nick says in his live streams, that is a big sign that people expect a recession. And a recession is something you don't really want to see, because that means these things will go down even more, okay, in a recession. So that was it. We can quickly take a look at the tariffs. So don't click away, but we're gonna take a look at the tariffs. Share. Okay, this is it. So as you can see, tariffs charged to the US. I don't know how Trump got these numbers. All people say that this is basically bullshit, and that these are not the real numbers. I mean, 90% Vietnam, 67% China. What this means is this is the number that China is charging to the US when they want to import US goods. So on US exports, they are charging 67%. So the retaliation is now 34. European Union, I'm from the EU, that's now 20. Japan, 24. Another big one is, let me see, United Kingdom, 10. Okay. So those are kind of the numbers that we're looking at. What you need to know about this is that the numbers are unfortunately bigger than expected. Okay, bigger than expected. That is why the impact on the markets. Is so heavy and so bad. Now, what do I have on the watch list in terms of setups? Well, I have two strategies. I have my OG strategy. Currently, we're going to run through the watch list, but nothing is looking that interesting. And then I have the new fundamental strategy, a little bit of a background. So the OG strategy, 1 hour chart, okay? So 1 hour chart, purely price action, no news, no indicators, no fundamentals, only chart patterns. Fundamental strategy, heavy on fundamentals, heavy on the sentiment, and basically multiple time frames. Okay, so I search for an entry pattern on the 1 hour, and I trail the stop loss on the 4 hour or the daily chart. Okay, I am actually in a setup on the euro dollar from this point. Okay, let's put it on right here. And my stop loss, I think I put the stop loss around this level, something like that, around 170 pips. I believe that is the level. Okay, so now this trade is with the second strategy. Okay, and this is more of a feeler trade, so still live testing, which means this is with reduced risk. But let me quickly run through this trade. I got pretty lucky with this one. So at this point in price, this was the 25th of March, and this was a day when the euro dollar was, in terms of economic numbers, very bullish. Okay, very bullish economic numbers. Good numbers from the EU, sort of bad or bearish numbers from the United States. Then you had the sentiment as well. What was the sentiment? Well, for the euro, you just had the military spending announced. Okay, military spending, very large military spending bill. Why is that bullish for the euro? Well, because when spending in Europe increases, then inflation goes up. Okay, with a lot of spending, inflation goes up. If inflation goes up, central bank will need to raise interest rates to battle the inflation. Okay, and then raising interest rates causes the currency or the euro, okay, it causes the euro to gain value when compared to other currencies. So fundamentals bullish, sentiment very bullish. You can call it sentiment or you can call it fundamentals as well. Okay, there's many names, but I just kind of call everything fundamentals because it's numbers. So that's the numbers. And then you had a nice break or nice reversal opportunity. What is a reversal opportunity? Well, that is something I trade with my OG strategy. It is when you get a descending channel, and then you get the pop-up, and then you get a retest of this high, and then the price usually goes into an uptrend. Okay, so that is a reversal setup. Saran says, I'm backtesting my strategy and trying to get funded in FP. Okay, funding pips, then planning for DarwinX. Yeah, no worries. Good luck with your backtesting. That's the best way to go. That's the only way to go. Backtesting first, developing your trading edge, proving that you do have a trading edge in the markets, and then you can discuss, or you can start thinking about getting some funding. DarwinX is a very long-term thing, so prop firms, I would suggest first going for a prop firm and maybe doing DarwinX on the side. Okay, not fully focusing on DarwinX because it takes a few months or maybe even a few years to build a good track record, depending on your strategy, to get funding and to get some investor capital. So prop firms are, I would say, a more efficient way if you have a good trading edge. Prop firms are a more efficient way to increase your trading capital, and DarwinX is a more longer term thing that you slap onto the trade copier, trade in the background, and build a good track record over a few even years. It takes years to do it, but it's worth it in the end. Okay, so that's about it. For the stop loss with this trade, I think I just looked at like this level as a support level. Okay, this level was kind of a support level. You could do some Fibonacci. If I have it here, I don't really do it. Like the Fib retracement. Okay, so this would be kind of the 0.5 level. You could do that as well. I just looked at this level. It kind of seems significant. Because I want to give the trade some room to breathe. Then got tagged in, and basically now running some really nice profits. So I got really lucky with the tariffs thing, because now this is running like maybe 2R or something like that. So yeah, really good trade on the euro dollar, but this is more of a live testing setup for the future. Okay, so still kind of testing this strategy, not going full risk. Full risk for me means 1% risk per trade. So going back to the first one on my list. So why do I have these? Free on the fundamental strategy? Well, because all of them are fundamentally bullish. All of these assets are fundamentally bullish in terms of economic data, in terms of economic numbers. So I'm looking at them for the fundamental strategy. Gold, I definitely have gold on my watch list. Now, this is pretty interesting. So we tested this level and retraced immediately. Okay, that is really interesting. I was definitely looking at this level. I could have bought, so I could have been a buyer somewhere in this area, but it just seemed kind of overextended, right? It seemed kind of like it was running away from me. Especially if you go to the daily chart. And I just didn't want to buy the highs. Okay, I didn't really want to buy the highs on gold. So right now it's looking a bit better because we have retraced. We got this pretty big retrace. We can measure it. Like maybe minus 3%. That's pretty big. So now that we have gotten the retrace, I'm not sure. I would prefer to see gold go down a bit more. Okay, I would prefer to see this, and then maybe for gold to show me a setup. I will actually put it on my watch list. I'm going to give it this sort of orange flag, which means I'm definitely closely watching this. But I would like to see gold hit this level, bounce off of it, and then go up with nice momentum, and then either a flag or maybe a break and retest, something like that. And then I would probably put my stop loss here. Let me see it. Yeah, I think this is an okay stop loss placement. It's kind of big though, kind of a big stop loss. I think I would make it a bit smaller though. Yeah, a bit smaller of a stop loss. This is pretty big. Maybe like this. Yeah, this is okay. So that's my game plan for gold. I do have it on the watch list, and I really like the fundamentals that is in play. Next one is gonna be again the euro dollar, which I do have this trade running, but let's remove this. Let's see it. If we get something like this, I would be happy to take it. Okay, so if we get a large impulse to the upside and then a flag, I would be happy to take the euro dollar. We are now printing a huge wick here, so that's a bit problematic. But yeah, if we do continue with that momentum, I would be happy. Now, there is a level of resistance. Okay, there is a bit of a level of resistance here, so that's kind of problematic for this sort of fundamental, more longer term strategy. That could be a bit problematic. I'm keeping that in mind. Okay, now for the OG strategy, yeah, if we do continue up and print a nice tight flag that sort of follows this momentum, I would be happy. But currently, we're printing a very large warning sign. Okay, on the euro dollar, very large warning sign. That is this huge wick right here, huge wick. So I would expect range bound price action. Okay, I would expect more range bound price action for the euro dollar. We do have NFP. Okay, we do have NFP tomorrow. A very important event, a very volatile event. That's gonna be probably moving the markets a lot. Okay, NFP tomorrow is probably gonna move the markets quite a bit. If you get a strong print, so if you get strong data numbers, then this chart could very easily drop lower. But if you get weak numbers, it would be great for my current trade, because then we would probably go up, probably test this level right here on the daily chart, probably go into these levels. So that would be pretty good to see. Okay, that would be pretty good to see if we can do that for the NFP. Now, if you guys don't know, for NFP, I'm basically, for the OG strategy, I don't trade it for NFP. I stop trading at around 1 or 2 a.m. on NFP Friday. But for the fundamental strategy, I'm just trading it through NFP. I don't really care, since I have a pretty big stop loss and it's more of a long-term trade. So yeah, euro dollar, maybe the move has already passed. Maybe this has been the move. Maybe now we're going to have a big range bound price action and a big retrace, but we will see. Currently not on the watch list. Currently not on the watch list. Not looking that good. The pound. In terms of the fundamental strategy, well, let's look at some levels. There isn't really a big level of resistance up to here. Okay, so this stop is at around 1.342, and then we have this big area of resistance. So that is definitely problematic on the daily chart. But look, there's quite a few pips that we can go right here before we hit that level. So the pound dollar for the fundamental strategy does not look that bad. The best option for me would be if we can retrace a bit, if we can pull back a bit and then bounce, show me a buy setup. That would be better, because right now we seem very bullish. We seem kind of overextended. So yeah, I would be a bit more patient for the fundamental strategy. How would that look on the 1 hour? Well, probably we would need to go down. Okay. Like this, go down and then reverse and then show me a nice buy setup. Okay. So that would be interesting to me. I would then consider some buy setups. Now that's for the fundamental strategy. For the OG strategy, I would need to see just some momentum on the 1 hour chart maybe some people were looking for a flag formation right here. We do have a flag that printed. Okay. So the flag is first high, first low, second high. Actually, it didn't print. Sorry, it didn't print. Okay, so there's no flag yet. We are currently forming a flag. If the next candle is bullish, then that would be your entry candle to get in on some buy setups. But we do have massive wicks to the upside. Really, really big wicks to the upside. That's a problem. That's a problem for me. I'm not looking for a setup. Okay. The best thing that could happen is if we can continue up to the upside, continue with that massive buying pressure, get a flag right here, or maybe a break of the high and a retest, that would be good. That would fit the plan. Okay. Currently not on the watch list. I am being careful because, again, we do have NFP, which is approaching. So only today I'm trading the OG strategy for like a couple of more hours, and then it is my cutoff time. I don't think we're going to get much this week. Maybe next week. So maybe next week, the euro dollar can do this. Maybe something like this. And then go up, buy setup. And maybe the pound can also range around a bit, retrace a bit, and then go up and then give me a nice buy setup. That is what I'm looking for on these currency pairs. Okay, so these are the most interesting because they have pretty good fundamentals and they are moving. They have some momentum as well. Now let's do the rest of the currency pairs that I trade with the OG strategy, which is the Aussie dollar. Okay, Aussie dollar is looking, it looks pretty, pretty corrective, to be honest. Okay, we have had this massive candle, huge wicks on both sides. That was the tariff. That was the tariff plan. Then we went down, then we went up, then we printed huge double wicks, retrace. That's a big problem. That's a big warning sign. So it's not looking that healthy for the Aussie dollar. Not really the price action I want to see. Let's go to the daily. Let's see how this is looking. It looks pretty flat. Okay. Yeah, it just looks pretty flat right here. Pretty flat, pretty range bound. Just looking for some momentum. Okay. Just looking for some momentum on the Aussie and the US dollar. Whoop. Okay, I'm back. Yeah. Aussie dollar just looking for some momentum. Next one is the JPY pairs. So yeah, we're kind of switching to the JPY pairs. I just want to do a brief fundamental analysis of the JPY pairs. So in the last couple of weeks, I have been saying that Japanese yen is getting very bullish because of the Central Bank of Japan. They are, I believe, raising interest rates right now. So they are in the process of raising interest rates, while most other economies are actually lowering interest rates. So what does that mean? That means that JPY, Japanese yen, should appreciate in value compared to other currency pairs. Okay, so that is what we should see, or what we should see in the charts is longer term. We should see price going down. Okay, EJ going down, AJ going down, NJ going down as well. We should see that happening, but recently the economic data has kind of cooled off a little bit. So if you're looking at fundamentals, which again impact the currency rate in the long term, we're kind of neutral. kind of neutral. We're gonna check out the edge finder a bit later, but we are kind of neutral in this area. And also the daily chart does not look that interesting. Okay, it hasn't been looking interesting ever since, you could say, July and August, when we had the massive sell-off. I can't do much with this price action. We're not really moving. We're pretty corrective. We're pretty flat. We have huge wicks right now on both sides, and then continuing to be flat. Let's see this. Okay. So yeah, huge wicks on both sides. Pretty flat, pretty corrective. I just need to see momentum. Okay, so for EJ, I need to see large momentum up or large momentum down like this for the price to clean up. AJ, well, we did melt down after the tariffs, right? We did melt down, but we could not follow through, unfortunately. We just kind of broke a huge wick, broke the low, retraced, went a bit flat. So yeah, not looking the greatest. Also, in the price action, you can see patterns such as descending channel going into an ascending channel. That's pretty range bound. That's pretty corrective. We did also check out the daily. There's no clear direction, kind of moving down overall. So it is sort of in line with the fundamentals. See? Again, fundamentals, JPY, very strong. Rest of the currencies kind of weak against the Japanese yen. So they should go down. The charts that we are looking at should actually go down. But unfortunately, I can't do much with these charts. Next one, NJ, which looks pretty similar to the Aussie Japanese yen. Okay, so NJ looking pretty similar to AJ. Again, not seeing much in terms of possibilities, in terms of opportunities. We do have huge wick to the upside, huge wick to the downside. That's an indication of a more range-bound, more corrective market. Okay, one thing that was interesting, we did comment on it yesterday in the Zentum call. Okay, one thing that was interesting was this price action right here for a reversal. Just a clear reversal setup. We had 1, 2, 3, 4, 5, 6 consecutive breaks of the low. I would say a very nice, very clean descending channel. Very nice. Reversal to the upside. Some large momentum right here. Nice bullish momentum. Breaking the highs, leaving wicks. That was an issue. That was a bit of a warning sign, but I was pretty happy to take a setup both on AJ and on NJ as well. This was technically a very nice setup. EJ didn't do that good of a job, but AJ and NJ were looking great, especially NJ. I mean, this descending structure, is pretty clean, I would say. Looks great. Okay, we're breaking those lows, we're retracing, printing wicks to the downside, and then you get this bullish reversal of momentum. So on both of those currency pairs, I was looking for a flag. That unfortunately did not happen. Instead, we went down with some, I would say, kind of strong selling pressure. Okay. So at this point, we were still doing okay. I was willing to take a flag, but then we went down even further and I was asleep. This was the part when I was asleep and I just didn't want to first wake up. And second, this price action was not looking conducive in my opinion. Okay, it was not looking the best. I saw too much selling pressure. AJ was the same thing. So if we flip back to AJ, just I would say this doesn't look good anymore, and it even continued with this sort of corrective price action. See? So in the end, no trade for me. Gabriel asks, can you give me your opinion on Zusi? He trades ICT and I don't know if I can trust him. Let me see on YouTube if I've seen him before. Zusi, ICT. Yeah, so for me personally, I'm going to give you my opinion. That's just my opinion. I can see the guy is first very young, which could be problematic because as a trader, you need to have experience. Okay, that's the first thing. And if you're 18 years old, there's not enough experience you could gather. So, nah, that's not really a good sign. Second thing, ICT. I mean, the whole ICT cult has been exposed multiple times for not knowing how to trade. The main guy doesn't have a track record, doesn't know how to trade. So those are already kind of two warning signs. The main reason you would use ICT is you would use it as a marketing tactic. Okay, so when you mention ICT, you get more views, and I know because I've used it in the past. So yeah, for content creators, using ICT is great because it's a buzzword. The final thing I would say, which will determine if he's a real trader or not, does he have a live trading track record from a verified broker? Okay, that's the only thing you need. If he does, if it's at least 1 year of trading, I would say you can believe him. Okay, if there is a if there's like 0% of a track record, if he's using unregulated brokers, if he doesn't want to connect his account to a MyFX book, well, then you know the game. You could write down if he maybe has a verified track record. If you have the link, I would love to see it. I love going through different track records and seeing how traders perform. It gives me kind of good motivation as well. So then you would say, well, why would you show your track record? That's kind of a private thing. Well, if you're a content creator, you would definitely show it because it can only help you. If you have a verified track record, it's only going to bring in more people and it's only going to help solidify, let's say, your reputation in the trading space. So the people that don't have a track record, 99% that they are not profitable. That is the reason why they don't have a track record. Showing how you execute trades, anyone can do that. And also, you could be a break-even trader, but for social media, if you show only the winners, right? So you have winners, you have losses. But for social media, you could filter what you show. You could manipulate MetaTrader screenshot. You could do some Photoshop. I've seen it all. So you could just show the winners and never show the losses. So people online think you're a real trader, whereas you're a break-even trader. That's also what happened with a lot of people that did prop firms. So yes, they got like 20, 30, 40, $50,000 payouts, but they bought, I don't know, 20, 30K in challenges before they got those payouts. So in the end, they were kind of maybe even break even, but for them, it was all about the marketing, because if you get a massive payout, you get 100 people to buy your course, right? So the thing actually pays itself. The challenges pay for themselves. Even if you're a break-even trader, you just show the winners, you just show the payouts, you don't show how many challenges you've blown, you don't show the losses, and then you make all of your money from selling the courses because you have some really good marketing. So yeah, that's my opinion. Hopefully it helped you. Always look for a track record. If there is no verified track record, there's a reason for it. So yeah. Back to the charts. AJ, NJ bad, AJ bad, EJ bad. It's all bad. Just pretty corrective stuff. And that's kind of the reason why I've started trading this new fundamental strategy. I'm done with these markets on our 6 currency pairs. Okay, I just don't want to sit on my hands anymore. I want to take some trades. I want to be more active. I want to have an extra trading edge. So sure, these markets will wake up. And at one point we will get some nice trends. But I just don't want to be sitting on my hands for so long that I just stare at flat charts, corrective charts every single day. So as a trader, you can have a period of, let's say, slow markets. That's normal. You're going to have it. But right now, that period has kind of crossed the point for me personally, for my personal trading, where I don't really want to focus on just one strategy anymore. I want to add a layer on top of that. And that comes down from a lot of very, let's say, popular trading books, such as Alpha Trader by Brent Donnelly, which I highly recommend you guys read. And in that book, he says, look, if you have a break-even 3 months, or if you have a negative 3 months, that's normal. But if you have break-even or negative 6 months or 9 months, you need to change something. You need to adjust something. That's a very long period to be break-even. That's a very long period to be negative. So at one point, you need to be fair, and you need to say, look, the current market conditions are not working the best for my current strategy. So let me try something else. Let me explore something. Let me build a new trading edge that I can trade in the current market conditions. And then once things improve, I can do the old thing as well. So that's what I've been doing. Getting back to it, let's comment on stocks. So let's comment on the indices. Heavily retracing, heavily dropping lower, selling off, massive selling pressure, broke this key low on the S&P, broke a key low on the NASDAQ. I have bought some longer term holds on the S&P, okay? So I think around maybe this level, I have bought some S&P. If we go lower, I'll buy some more. Okay, so if the S&P goes lower, I'll just buy some more as a very, very long-term hold. I have some crypto. Now I want to get some S&P. Yeah, that's kind of the game plan. You want to buy when things are cheap. You want to buy when people are panicking. You want to buy when your grandma tells you that the stock market is going to go to zero. So when the retail is heavily short, you should go long. You should be a buyer. It's a very good contrarian signal. Okay, so S&P 500. Is there room to go lower? Yes, especially now that we broke this key level. There is room to go lower. Is this a huge market crash? No, it's not. This is the monthly chart. Okay. You can see this retrace. It's not really that massive when you look at the grand scheme of things. It's, what is it, around 11%? But in 22, there was a 27% retrace, right? Here in 2020, 36% retrace, okay? Was this COVID? Yeah, okay, so that was COVID. This is COVID. This is 2008, major crash. Holy moly, this was 55%. And we still recovered. And then like a couple of years later we were at all-time highs. So if you were a buyer in these levels, if you just kept buying, you would be up quite a few percentages. Here in COVID, if you just bought as we were going down, it'd be great. 2022 crash, just bought. So yeah, that's the game plan. I would buy here, I would buy here, buy here. Just keep buying as a very long-term hold, not really as a trade. So not really as a short-term thing, but as a long-term hold, buying stocks when there's a discount, when there's a bit of a crash, when there's a bit of uncertainty. Really, really good way to go. But yeah, I do expect lower prices in the short term. I do expect the stock market to go lower because that's just where the momentum is located on. So currently the sellers are in control. You're getting some massive selling pressure. NASDAQ is down even more in terms of percentages. That is normal. The NASDAQ is more volatile. than the stock market. The Nasdaq moves more. Let's check out the WIX. Why don't I have the WIX on my watch list? I should definitely have it. Yeah, let's do that. Let's put it, it can be here on the bottom or here after the stock market. So WIX, this is the daily chart. As you can see, volatility is going up. Okay, volatility is definitely going up. What does this mean? I think some of you guys haven't seen this chart. Maybe you have never seen this chart. But if you have seen this chart, you probably are not sure what does it mean. I was in the same boat, but then I read Alpha Trader. Great book, awesome book if you want to learn about macroeconomic stuff and how the professional traders execute trades. So I'll actually put it in the comments. Alpha Trader, Brent Donnelly. Okay, so volatility. This is the volatility of the S&P 500. It's also called the VIX. Okay, the VIX. And when the VIX goes up, stock market goes down in most cases. See, so if we go to the monthly chart, okay, this is a bit of a mess, but you should see during COVID, massive spike up, 2008, massive spike up, 2022, where is it? Here, not that big of a spike, but the volatility still went up. Then we had one in August, massive spike up. And you can see on the recent chart, we are going up as well. So when this thing is going up, it's very certain that stocks will go down. If the VIX is going up and the stock market is going up, so if VIX is going up and the stock market is, let's say, trending up, that's a big warning sign. That shouldn't happen. That shouldn't happen. The reason is when we are going up, there's a slow grind, okay, very slowly. And then when we sell off, it's really fast. A lot of volatility kicks in. So buying happens slowly, as you can see here. Accumulation happens slowly, it happens over time, but selling happens quickly. It happens in a few days. You just get a massive sell-off, and then you wipe out 12% of the gains. So you can see it took us, let's see, from this point, it took us a couple of months to go to the top, but then it took us 1 month to drop, or maybe just 1 month to drop. Okay, 2 months to drop, see? So 5 or 6 months to go up, 2 months to drop. That's why when the volatility goes up, stocks should go down. Okay, hopefully that is helpful. As I said, stocks are very, very bearish. Metals. So I'm not sure if any of you guys are trading metals. Metals are very popular. I've seen quite a few people trading metal markets. That is gold, silver, copper, stuff like that. Okay, I'm looking at silver. I'm looking at gold. Gold is very bullish fundamentally, so I have it here on the top on my watch list. Silver is not bullish fundamentally. Silver is fundamentally bearish. So silver doesn't look as attractive. It doesn't look as enticing. Also, the chart is pretty bad. The current daily chart, massive sell-off. You can just see there was a slow grind up. Gold chart looked so much cleaner. Gold chart currently looks so much cleaner, so much better. Silver looks pretty corrective, looks pretty bearish, especially in the most recent price action. So yeah, I'm leaving this one alone. Okay, silver is kind of like Ethereum, and Bitcoin is gold. Gold is Bitcoin, silver is Ethereum. So you can just see by the movement. Whoa, so this was the all-time high. Interesting. You could just see by the movement that we're not doing much. I mean, this looks pretty similar to Ethereum. Look at this. Huh. See? And Bitcoin, look at Bitcoin and look at gold. See? Gold looks much healthier and Bitcoin looks much healthier than silver or Ethereum, right? That is pretty interesting. That is pretty interesting to see. I'm I'm leaving silver alone. I'm waiting for a signal on the edge finder. So that is the software I use to gauge the fundamentals. So I'm waiting for a signal to be bullish, and then it would be a buyer. Now, your question may be, am I ever going to consider selling, being a seller on the S&P, seller on the NASDAQ, seller on silver, seller on gold? For now, no, not really, because the overall trend is up. See, up, uptrend. Silver, okay, mainly uptrend, right? So your edge is much better if you keep doing buy positions. Okay, if you keep doing buy positions, then your edge is gonna be even more in your favor, because overall indices go up, metals go up as well. So it is in your best interest to actually be a buyer in these markets. One also reason why selling indices is very hard, that would be because the sell-offs are so fast. Okay, the sell-offs are so fast, so rapid. See, the uptrend is good, slowly grinding up. So there's no really major surprise. But if you're a seller, I mean, this thing just melts like crazy, and it's really tough to get in. It's tough to get in. With the uptrend, you get more pullbacks, I would say. You get the price pulling back a lot more. So it's easier to catch a nice strong uptrend than it is a downtrend. With a downtrend, again, you can see it just a couple of days and we melt. A couple of days and we melt down. That is the reason why buying is much better, I would say. Sure, there's an art in selling indices, there's an art in selling stocks, there's an art in selling gold. I just am not good enough to do it. Okay, it's just I would probably lose a lot of money before I learned how to do it properly. I leave that for the extreme professionals, for like prop firm traders, like real prop firm traders, not FTMO. But the S&P Capital guys, positive equity guys, those guys know how to short these assets. For me, I just don't have that knowledge. I don't have that trading edge. So we did silver, looks broken. Gold looks much better. So what would be my advice? Well, currently focus on gold. That's what I'm doing. Part says, how do you use the edge finder? Okay, so I'll give you a brief explanation of how I use the edge finder. Let's do that right now. I was planning on putting it on the screen anyway, so let's stop sharing this, close this down. Edge finder, present, share, boom, boom, boom. Okay. So this is the edge finder. Okay, let me just put my screen back on. What I do is same as Trader Nick. I just remove the neutral bias. Okay, remove the neutral bias. And then I have what I want to look at. See, I have gold, pound, US dollar, euro dollar. Okay, very bullish. See, the numbers are looking good. Okay, the numbers, economic numbers are looking pretty strong. Commitment of traders is okay, neutral, but you have the retail positioning, which is short, so you want to go long. Seasonality score is good as well. That means in the month of April, gold tends to go up and euro dollar tends to go up as well. Okay, so you can view that seasonality. See, this is April. Usually in April, gold makes a nice gain. The best months for trading gold would be January, February, probably March as well, April, August, December. Okay. So how do I use it? Well, I just remove the neutral. I see what is trending. Okay. I see what is very bullish or bullish. And then I jump on the charts. I go on the 1 hour. I see if I like any entries. Okay. So let's go back to boom, boom, trading view, share screen, boom. So I jump on the euro dollar. Why are you retracing? And then this was the point when I took the buy setup. right here. So on the 25th of March, woke up, saw the edge finder, it was bullish. I saw a nice setup, nice reversal setup from a descending channel. I placed my order. I went on the 4-hour chart. I went on the daily chart. I found a good stop loss level somewhere around here. Got tagged in. And now I'm just trailing it. Okay, I'm just kind of trailing this position as we go. That's the game plan. Just gonna trail the position, probably on the 4-hour. Okay, probably gonna trail the position on the 4-hour chart. That is how I use it. So for this new strategy, it is a very, very important component because I'm heavily relying on the fundamentals. I'm heavily relying on the sentiment. I'm heavily relying on the macroeconomic picture. What is the macroeconomic picture? Well, that is when Trump imposes tariffs, makes the dollar go down in value. That is when the euro invests a huge amount of money in military spending, which brings the value of the euro to the upside. Okay, so euro dollar, good play in terms of the macroeconomic picture. Yeah, that's about it. Best way to keep up with macroeconomic pictures or the current state of the economies, Trader Nick, he posts a video once per day. At the end of the day, it's a very, very good analysis of the markets. I really learn a lot from it, so I use that. I also have Twitter. I have Brent Donnelly. Okay, that's the writer of the Alpha Trader book. I have Vuk Vukovic. He has a great Twitter account. He posts some useful stuff, and he has a newsletter as well. So that is great. And yeah, that's about it. So I get my news from Trader Nick and Twitter. Okay, now Twitter can be very toxic. You could really get lost in the rabbit hole of some really stupid stuff. But if you can filter through it, I recently deleted it off my phone because it's so toxic. But I have it on the PC. So when I need to find something on Twitter, get updated or get updates, I just open the PC app, log in, search Brent Donnelly, search Vuk Vukovic, search whatever I want to see, Elon Musk, and then I just go through those accounts. So getting back to it, we have crypto left. I mean, thanks, man. Appreciate the efforts you guys are putting in to show the real side of trading. Thank you very much for the feedback. And yeah, that's really good that you are taking some value from it. Most of the Forex space is like flexing, fake trading, Lambos, courses. So yeah, that's what brings in the views. But for me, I wanted to bring a more realistic approach to it. I wanted to show you the real side of trading. And trading is first. It's not a get-rich-quick scheme. That's the number one thing you should know. Second thing, trading, I would say it's very tough for trading to be your main income. And that gives you a lot of problems. So having trading as a side income, as a side business, that's what's good. So trading is not my main source of income. It's definitely not. My main source of income is creating content, ad revenue, promoting software, Zentum trading. Okay, so if any of you guys want to check out Zentum trading, you could join the free Discord. So Zentum trading is where we teach you how to go from zero to a consistently profitable trader. Those are my main incomes. Trading is my secondary income because if you make trading your main income and you have a negative month, who's going to pay the bills? So imagine the pressure you are going to have on your trading if you have bills coming in each month and if you're not making any money. You're going to be taking some very shitty setups. You'll be taking even more losses. You'll get into even more drawdown. So that is the recipe for disaster. And if you think like the best of the best guys are full-time traders, yes, they are, like the guys working at S&P Capital. Yes, the only thing they're doing that is trading, but they have a base salary. Okay, so they have a base salary every month to cover their basic expenses. So the pressure of needing to make money is not that high. It's still a lot. They are still like pressured from their boss and their peers. It's a very competitive environment. So most of them are making money every single week, I'm not gonna lie. But even if the worst of the worst happens and they have a negative month, they have the base salary to get them through that month to pay the bills. So just know that trading is not a get rich quick scheme, and most people will achieve profitability by having trading as a side business or a side income, not the main income. Full-time trading is kind of a lie. It's just very, very hard, and I would not wish that upon anyone, to be honest, because the pressure is so high. It's much better than to go work at a prop firm. You could go and get a job at a prop firm if you want to be like a full-time trader. Okay, crypto is boring. It's holding up okay. So we haven't really seen a massive sell-off from the tariffs. You would expect to see a massive sell-off because crypto is actually a risk asset. Okay, many people think that Bitcoin is a safe haven, and it's really not. Safe haven assets are gold, Japanese yen. So that means when people are scared, when there is uncertainty in the markets, people fly from risk-on assets such as S&P 500, so stocks, let's say Bitcoin, even oil maybe, yeah, sure. They fly into gold and they fly into, let's say, yen pairs. Okay, so EJ goes down, AJ goes down, NJ goes down, US dollar JPY goes down as well. JPY gains value. Okay, so that is about it for that. What did I want to look at? Ethereum, I do have some Ethereum as well, so I hold crypto as a long-term thing. I do have some Ethereum, but this is a very broken chart. This chart looks pretty bad, even the monthly. Ethereum, I'm sure it will rebound. You know, when we have another massive bull run, maybe in like 2 or 3 years, maybe even in 10 years, no one really knows. So this should rebound and go back to the highs. For now, it's a broken chart. So for now, it looks pretty bad. Dollar index is just melting lower. Tariffs have really been not been kind to the dollar index. Okay, so tariffs have been pretty bad for the dollar index, losing a lot of value, just crashing lower. Massive momentum as well. Look at these 3 candles. Massive selling pressure. Large body, clean close, large body, clean close, large body, clean close as well. Oh my God, my stupid alarms are going off for the whole day. Massive red candle for today as well. As you can see it closes in 7 hours. That's pretty bad. It's a pretty bad story. The technicals here, even the fundamentals and the macroeconomic picture is telling me that more downside is possible. Okay. So I'm leaning bearish on the dollar index. I would say more downside is actually expected on the DXY, which is good for us as Forex traders. That means EU should go up, GU should go up, AU should go up in value. And we can trade that. We can, if we get a trend, we can make some money. Okay, we can make some money if we get a nice trend up or a nice trend down. Doesn't really matter if it's up or down. Well, okay, it matters for the S&P and the Nasdaq and gold because I don't want to go short. But for currencies, I'm pretty happy to go short. I don't mind it. Okay, I don't mind going short with the currencies. And the final one for today is gonna be US oil. So let's do US oil, and then we're gonna wrap it up. If there are any questions, make sure to put them in the comment section. US oil is going down, losing a lot of steam. So losing a lot of steam, losing a lot of value. That is something that Trump actually wanted. So in Trump's campaigns, he said, I believe he said he wants a weaker dollar. Okay, so he's kind of doing all of the things that he said he was going to do. Weaker dollar, we have that. Lower interest rates, we're probably going to have that as well. They will probably need to cut interest rates because inflation, or not inflation, but the economy could be contracting a bit. So in order to stimulate the economy, in order to start expanding the economy once again, you would need lower interest rates. So that is also something that may happen in the future. And he also said he wants lower oil prices. That's exactly what is happening. So oil has been going down. I think he went into office somewhere around here. So since he went into office, we have dropped like 17%, 17% in the price of oil. So massive sell-off in oil. That's good if you need to fill up your car, as Nick says, if you need to fill up your car with gasoline. And also it's good for prices in general, okay? So it kind of lowers inflation, okay? The reason is basically that everything that you get delivered, everything that you buy was delivered by either a boat, a truck, or a plane, and all of those things consume oil, okay? They consume gas, diesel, kerosene, and all sorts of other fuels that are made from oil. So when oil prices go down, the price of delivery goes down, and the price of the final good, okay, the final good like an apple or a car that gets delivered, or I don't know, like construction material, should go down as well, right? So that is interesting. Things should be a little bit more cheaper, I guess, for the final consumer. I'm not sure if that is the case. Here in Croatia, I have been monitoring the prices of gasoline. They haven't really changed much. This is maybe more impacting American population. So I'm just in this small country called Croatia, where not a lot of things go on, and the prices are usually fixed. I don't know. The price of gasoline rarely changes or rarely goes down. And that's about it. US oil going down is also a sign of a possible recession. And a recession is something that no one wants. I don't know much about recession, but what I do know is that no one wants a recession to happen, because that means economic growth is going to be very bad. The economy will be contracting. So less jobs, less money, stock market goes down. Yeah, no one kind of wants to see a recession. Lower oil prices are correlated with inflation scares. So when this chart is going down, okay, when this chart is going down, that could mean that people are getting even more scared about a possible upcoming recession. A possible upcoming recession. For this chart, we are now at a key level, actually. We will see if this will break. Very key level, really strong support level. So if this breaks, I think we could slide a bit more. I think we could slide a bit more in these prices. Yeah, this is a really key level. I mean, look at this on this monthly chart. If this thing breaks, I mean, we could definitely slide lower by quite a big amount. So bearish on oil currently, bearish on oil. And I don't personally trade it. So that's about it. Let's do a quick summary of what I'm personally looking at. So I trade two strategies. For this fundamental strategy, I have gold, I have euro dollar. Let's do the daily chart. So I have gold, I have euro dollar, I have pound dollar. Fundamentally very strong. In an uptrend, looking for buy setups, looking very strong, very healthy. For my OG strategy, we have nothing on the watch list. Everything just looks pretty corrective on this 1 hour. I'm just being patient. And that is about it. Bearish on the indices, bullish on the metals, bearish on crypto, bearish on DXY, bearish on oil. Hope that helps. If you guys have any questions, make sure to either put them in the comment section after the live stream, or you can join our free Discord. Again, so if you want to go from zero to becoming a consistently profitable trader, you could just test out our free Discord. You could send a question in there, or you can send us a DM. Okay, you have free coaches at your disposal. You have Nico, Griff, me. We're available pretty much for the whole day to help you. And if you want to become a premium member, you could check out the website as well. Thank you guys very much for watching, and see you next week on Thursday. So in terms of live stream schedule, most days it will be on Thursday. Okay, any update is going to be sent on my Instagram story. My Instagram is at Marcos Trading Journey. I'll put that in the comment section as well. So Marcos Trading Journey. But what you could expect is every single Thursday, if the markets are moving, I'll be doing a live stream at around 4, 5, or 6 p.m. London time. Depends on the day. Every update, schedule update goes on the Instagram. That's it. Thank you very much for watching. See you in the next live stream.